Thank you, everyone, and thank you for coming to the event and helping us to make it a really a grand success for us. Thank you, and welcome to all the panelists. I think embedded finance, if you look at the topic, we may not realize it as a term, but I think we are part to this on a day-to-day basis. Whenever you travel to the Ola or Uber and you use the Ola postpaid, or say, for example, Swiggy, you are going and using kind of things, alternate payments like eat now, pay later kind of things, you are using embedded finance, right? And in the previous sessions, we have Stalabs, Ranjit, and Aquacurrent. This is all like embedded finance. Like it's a non-financial company. When you start plugging the financial services in their ecosystem in the value chain, it's embedded finance, right? Embedded into that. And I think it's quote is continuously going across the internet that it says that every company will be a fintech company or the finance company. Amazing, right? So with that note, I'll start with Alok. And Alok, since you are being one of the lender and working with lots of the marketplace as an interface to lend. So just want to, for the audience also, give you insights into how the embedded finance has evolved and what kind of the value does it create for all the stakeholders into the entire value chain.
Thanks. I think there are layers of embedded finance, and I'll speak more with context to lending within the financial services. That's what we are most familiar with. And different platforms have chosen to kind of play at different layers of that, right? I think the most powerful one is where you're embedded in the context, right, of that platform. So buy now, pay later is a classic example of that, where financing then is not just playing a role of credit, but it's actually stimulating more consumption on that platform, and hence the strategic value of doing that tends to be higher. There are platforms that are playing it more at an interface layer of saying we've got this audience and we know that we can cross-sell financial services to them, and hence let's do that for monetization reasons. That again has been positive from a customer standpoint to the extent that customers don't have to go find financial services somewhere else, be able to discover those on the interfaces they're already using. But the strategic value of that is relatively lower for the platforms. And then the third piece of this, which depends on the nature of the underlying platform, has been, is data embedded into it? Can you actually create frictionless customer journeys? Because the platform has awareness about the customer, has probably the historical data and so on and so forth. So depending on, at what layer is a platform playing embedded finance, the value for the customer and the value for the platform itself has been variable.
Yeah, thanks, Alok, for giving it an initial context. So Sonal, now come back to you. I'm not going into any particular order, just because you are a marketplace, right, and largest e-commerce platform, and it's not a finance company, right? But you have been heading the digital lending for the Flipkart. So I just want to understand that how do you see the embedded finance, because you have a marketplace where the different kind of the stakeholders are there on the platforms, right? Be it on the customer, be it on the sellers. And how do you see that embedded finance helping you to create a value for your Flipkart as well as for your own different stakeholders?
I think that's a very interesting question, right? But maybe instead of saying, how does it add value to Flipkart, let me actually say, how does it add value to a customer? Because if a customer is actually enjoying a certain journey, automatically it has a direct correlation with the merchant, the retailer, or the platform, right? Imagine a consumer journey where a consumer comes onto the platform, wants to buy something, might or might not have access to the money in the account at that point in time. So you very nicely offer them credit to buy. The customer can pay it after a month, after 15 days, in EMIs, consumer choice. Also, you tell the consumer, hey, by the way, in case you want to take care and safeguard your product, service, I have an insurance for you. I have a warranty for you. Just a click away. And at the same time, you're like, hey, why do you have 5 rupees spare change? Why don't you just put it into like that savings, right? Or you're returning something, instead of taking money, why don't you just put it in the savings, save it for that next purchase that's coming your way. So what we've just done is, as a platform, we've just upped our game. But all of this was all customer. So it's a customer making choice. It's a customer going through a journey. But in all of these points in the journey, they have actually gone through embedded financial transactions, right? In a very beautiful and a seamless way. All accretive value to them, right? Anything which is essentially driving a customer delight, a customer success, is obviously a customer retention for the platform and therefore growth. So it just works beautifully. And this is just the customer part. I mean, I can essentially say the same thing for the merchants that operate on the platform, right? It's a similar story for them. You come, you want to sell on the platform, but for selling on the platform, you need to buy some goods from somewhere. For that, you need a loan. Of course, I can give it to you, right? And as you start selling goods of the platform, I can also help you pay back that loan. So it's just so inbuilt into what the platform stands for that it works beautifully for everybody in that ecosystem, right? And that's what we essentially would like to capitalize on.
Thanks, Sonal. Thanks. So Hardika, coming to you again as a lender, every sector has its own requirement, its own value chain, right? Customer journeys and the challenges also, be it on the agri-tech companies are there, or it's an e-commerce platforms, or you talk about any aggregator, right? Now, how as a lender, when you need to approach and provide the lending services on this kind of the platform, how do you make an understanding that, okay, what kind of the requirement will be there for each specific sector, and try to make your product suited to the demand of that particular sector?
Yeah, I mean, the journey always starts with the customer. So the customer usually tells you along the way, if you listen, what they need. And if we are listening right, then we understand what they need in terms of product or product design, right? Do they need credit? Do they need payments? Do they need insurance? What do they need? If they need credit, then for how long do they need it? What kind of amount do they need it? So that is the first and most important non-negotiable part of the consideration that we all need to have, which is what does the customer need? And then from that point forward, the next 2 or 3 bits at least, one is how do you make that journey frictionless or as frictionless as is possible? I know we live in a very complicated KYC universe and so on, and I know there is some movement to make that better, or, as we heard in the union budget a couple of days ago. But nevertheless, the idea is how do you make that journey as frictionless as possible for the customer so that she gets what they need at that point in time in a packet that they want that to look like. And then the last bit, which is to me important, and especially increasingly in the regulatory environment that we live in, is how do we partner with the regulated entities that are well governed, well established, because the risk of working in the gray space is what it leads to shutdowns, it leads to complexity, and in the end it leads to a broken customer journey. So again, putting the focus back on the customer side, ultimately working in the regulatory environment on the right side of the regulations will go a long way to make sure that the customer has a satisfied experience.
Thanks. And Alok, any things you would like to add on the same?
Yeah, I think the only other system level consideration which I think is significant in the role that embedded finance is playing is the role in inclusion, right? Yeah. Financial services is constrained, well, lending is constrained by A, the operating cost, and B, the credit cost. So one is the process question and second is the data question. And both of them are getting turbocharged because of embedded financing, right? So the fact that customers can avail of financing, when they need it, where they are, rather than us having to set up branches and salespeople to go out sell to customers. And correspondingly, the fact that we can get richer data about customers beyond the bureau allows you to, spread credit inclusion significantly. So in our case, for example, more than 40% of our customers will get their first business loan from us. Right? And a lot of that is because, we work with platforms where the lending activity is embedded. And in that sense, the cost of acquiring as well as the potential cost of credit risk goes down. So I think there is, from a customer segment standpoint, there is the well-served where you're trying to increase consumption by embedding this in use cases. But there is also the poorly served audience which is experiencing their first financial products through this mechanism.
Thanks, sir. Now, Nilesh, coming to you, I think all things is possible because the technology enablement is happening. The technology service provider like you also making that technology available for the solution to get integrated to these platforms and all. So how do you see the role of the technologies or the digitizations playing into making the financial services, be it on the wealth, be it on the lending, or be it anything, taken from the lenders or the financial service provider and get embedded into the players from the entire and managing the entire customer journeys?
I think if all that will be very seamless, then we don't have a role to play in the lending journey. But I think an area where we continue to see, because all, still there are gaps in the process, and the loan size and the size type of the customer will require you to have a different journey at the front end. But more importantly, the lending companies will be profitable if they collect well. So, well, lending is definitely hard, but collecting is equally. And so I think what we have seen is some of the BNPL players, who operate at velocity, will also have to collect at velocity. And then you will see that players like LeadSquared can play a role in driving that, to basically improve the bottom line for the lenders. And I think that's one area, apart from what we already do from the front end side. So,
thanks, Nilesh. Now, coming back to Hardika, to you. When any financial service provider, be it a lender or anything, when work with this interface company, right, the non-financial companies, how do you see, what are the things, important things in terms of the relationship, in terms of the partnership that need to be taken care from both the partners, like financial service provider as well as the marketplace or anything who is there? What role do you expect them to play? What role that you want to play by the lenders, right?
Yeah, I'm going to pick up from what Alok was talking about. If you think of the lending life cycle, you really have, the customer acquisition, the underwriting, and then what we were just talking about, collections, right? So the question is, what kind of a partner are they? Where are they playing? And does it help reduce your customer acquisition cost? Does it help reduce your underwriting or your collections cost? And fundamentally, if there is a yes to either or any of those, then that's a good partner, because that partner is providing a unique service that you are able to then reduce something on your side and let them take that. Typically what we have seen right now in embedded finance, largely it's still a customer acquisition game, right? That's the acquisitions happening at volume, in a variety of ways, but the underwriting, that's the question that I think lenders like us, we ask, where does the underwriting live? And we own the underwriting because we own the risk ultimately, especially with the digital lending guidelines, with no first loss guarantees available, et cetera. The ultimate risk remains ours. So underwriting has to be strong, which means the activity we need to do is not just say, okay, fine, you've acquired the customer, but what do you really know about this customer? What is understood, verifiable, available, that I can use to build models to underwrite them and be super confident that the outcome of those models will lead to lower credit cost and collections will not be a challenge. That's one. And then if it is the case, how do I enable my teams to go collect if that is not possible? Because the assumption is one thing, the outcome is another thing. So largely when two parties come together, making sure you're clear on where their play is and what the offset is in a downside scenario, and being absolutely clear on what that might look like and what is your plan B to get back to where you need to be, because ultimately as a lender, you own everything, including the customer and the risk.
Thanks. And I think, so Alok, I'll continue from the same, Hardika touched upon most of the point. But how do you see that as a financial service provider to take care on the data security and the privacy part of it? Because there is lots of the data exchange between the partners. So how do you think that's critical, and how need to be taken care of it?
Yeah, I think I'll assume by financial service provider, you're calling what we call the regulated entity. Absolutely. Yeah? Okay, because there's just all the terminology floating around. So I think at the regulatory entity and the norms that need to get followed for data privacy and so on are fairly well specified. I think they will get cemented with the data privacy law, hopefully by the monsoon session. So I think in terms of what needs to get done, what standard needs to get complied with, we are in a good place. I think capacity gaps exist, right? And they exist through the full ecosystem in terms of, have regulated entities historically, beyond the banks, have regulated entities historically focused on, data security as much as they should. What does it take for them to build that in-house capacity? Is there a good set of service providers who can help them ramp that up? So I think there are real capacity issues on that side. What we have seen in the specific case of embedded financing is that the entity boundary provides a degree of protection. And what that means is this, right? If we are working with a front-end partner, they are not necessarily going to share all the data they have regarding the borrowing entity, whether the consumer or the small business. But we can trade, certain derived information, right, which has less sensitivity. And this is not to say that derived information does not need to get protected, but just the sensitivity bar moves down. So yeah, how much data needs to get shared, why, how long does it need to get retained, and then how do you build capacity amongst the financial services providers? I think those are all the good questions to ask there.
I think thanks. And Nilesh, taking the cue from Alok when he spoke about the role of the technology service solution provider to play into that, right? And today's like lots of the API aggregator platforms are emerging and who are providing the plug and play kind of the solutions between that financial service provider, regulated entity and that marketplaces and all these things. So how do you see that importance of this plug and play solutions? It helps both the partners to fast track that as well as take care of all the necessary compliance requirement, risk, as well as the data security and the privacy part of it.
No, I think the importance of those players will just keep gaining, and they will certainly play an important role because they bring not only the complexity of handling technology but scale also, which I think is not, at India scale it will not be trivial. So I think combining all of that and also ability to kickstart something new. Let's say if any standard offering has to be brought onto the platform, once it is coming in, all the partners benefit from that relatively quickly. So I think these 2-3 things would be important, and specialization in that would be uniquely offered by them versus every other entity trying to ramp it up. So I think that's where the value will be from their side.
Thank you. Now, in the context of the topic, we are talking about the inclusion, and most of the solution, at least whatever is available and people get to know, is everything related to individuals. But MSME is a larger part of this inclusion aspects, right? And that's their typical lending challenges are there. So Sonal, I want to understand, because you work on lots of the MSME as a partner, the sellers part of it, right? How do you see that these platforms help to embedded finance of the structure, help the financing needs of these segments player, which is typically derived of the financings? How do you see that platform helping them?
Honestly, if you ask me, I think we are far away from really doing a good job at it, right, to be completely honest, because obviously there sits a segment of these users and consumers, right, that have a very different need. They are not as financial savvy as we would like them to be, right, for them to be able to interact with the platform. The platform has to be extremely basic for them to understand how much finance do they need, for what do they need, what documents do they have, what do they not have, because the data in itself is very shifty, right, in terms of what is available. So it's been a long journey where there is a lot of work that is happening on, even if you are a very small seller that does only few thousand orders over a month on a platform, right, how do you really understand what technically your underwriting model should look like, right? So it's honestly very challenging. And then even if, for instance, you end up extending a loan, and these are very short-term loans, right? It's not even a loan technically, but it's okay, we'll extend you like, early payments, not delayed payments, some bit on invoices and so on. But the challenge still remains that a certain scale has to be built up on all of these users and segments for us to be able to understand better, right? And only if as a platform we don't understand them so well, it is hard for us to work with external partners to do that job, right? So I think we're still trying to do a better job of it. There is definitely an opportunity. I think that is given because of the access that you have, so the relationship that you have. But we really need to build on it. And I think it is going to take us some time to be able to fairly do a good job. On the other segments, I think we're pretty much there. We understand what needs to be done. It's just about executing it to the core. On this part, I think we really need to go back to our basics.
Absolutely. And Alok, coming back to you, again, from the lender point of view, I want to understand, how do you see that embedded finance kind of the structure can help to widen that scope of this digital lending kind of things to this segment, MSME, especially to their working capital requirement? I work with a couple of banks, and working capital requirement, the documentation requirements, and still is a pretty challenge to take care of the working capital loan. Do you see that kind of the embedded finance structure may able to help certain need of that financing for these guys in take care of the especially working capital kind of things?
Absolutely. And we are seeing evidence of that. I think what has happened over the last 4 or 5 years is primarily led by digital payments. A lot of this information and transactions have come into electronic domain, right? And that is the core enabler for MSMEs to start to get, access to finance. Whether it is in the embedded finance notion or even a bank looking at a bank statement and seeing electronic transactions within that, right? So that digitization, I think that curve has been central to it. I think on the standard of underwriting, I would reckon today that data flows and so on exist to make MSME financing, almost as convenient as consumer financing, right? I think the process friction on the MSME's financing side is yet to be solved for. So if you look at what needs to get done to, get a consumer onboarded versus an MSME onboarded, those are just two different levels of friction that exist out here. So I think there is a need for the regulators to put their heads together. The industry has made several proposals regarding how that can be solved for. There is policy intent to solve for it. Even in the budget that we just saw, there are announcements around both the national financial industry and the DigiLocker. But hopefully these starts to come to bear quickly to solve the onboarding problems. I think that is the single biggest limiting factor on the friction side. I also just want to reflect a little bit on the API question earlier. And I think there is a problem there. And the problem is that, many places, because the underlying infrastructure does not support APIs. And let me take GST as a prime example. What the data intermediaries are forced to do is not to provide just an API, but they get a look through into the data. I think that's a big risk sitting out there. Account aggregator has tried to solve that, at least for the banking information, where earlier there was a data intermediary sitting there. Now there's a data blind pipe sitting there. And I think we need to get that done for more and more data sources so that data security is preserved at that layer itself.
Thank you, Alok. And Hardika, I'll come back to you on the same questions on the MSME because Kinara is heavily into the MSME lending. You understand. How do you see that embedded finance may be helping us to widen that digital lending for the MSME segment?
Yeah, and on the, I'm going to pick up from the documentation point because you're right, this DigiLocker for entity, if it happens, will be that ease of business, right? We are 63rd worldwide ease of doing business as a nation. So there is a lot to do here. And MSMEs suffer the most because the company structure, is it a structure? Are they sole proprietors? Are there partnerships? What is the ownership? How do you quantify it? Now we are saying PAN, all MSMEs will need to have a PAN. Well, we just went through Udyogadar, then went to Udyam, now we are at PAN. So, okay, fine, whatever it is, let's stick with it, and can we make it work? Because that is the confusing part for MSME, right? Now, what do I need to register? Where do I need to register? Who should I tell that I am a registered entity now, and therefore I am eligible for access to credit and access to a variety of other programs, whether it's TREDS or GEMS or what have you, that are government run. So from an MSME perspective, the documentation piece does need to get better and standardized and simplified. And I do think that is just one part of unlocking the potential. The other part is we just need more people willing to take the risk, right? The truth of the matter is that there are still very few unsecured MSME lenders in this country. Well, the demand remains at 400 billion or more. And this is why, if you look at the data, right, NBFCs grew double than banks when it came to this sector or this segment, because we are providing that last mile, we are providing the capital required, but it's still far, far less than what is needed. So as we talk about becoming a 5 trillion economy and capital access has to be made easier, MSMEs are driving the economy, so how do we plug all these gaps is really a joint effort, both at the regulator side, at the Fin Ministry side, but also at the private sector, right? We have to learn to take risks and be open to doing unsecured business lending for working capital to move the ball.
Thanks, Gira. Now, I think there in the industry, if you look at it, lots of initiative which has been taken in terms of bringing the framework, be it on the OCAIN or ONDC, they are like also targeted towards the kind of the building that infrastructure supporting the embedded finance, right? OCEN is like which LSP initiated, or ONDC is like helping, Alok was talking about the data payments, digital payments, data access and all this thing. ONDC will create that kind of a data access. So how do you see that the OCEN, ONDC and all these things contributing to the embedded finance kind of the framework? Maybe Alok, and then come back to Sonal, to you.
So I think, the Indian kind of, digital finance journey over the last 5 or 6 years, one of the big enablers has been the public digital infrastructure, right? As we have done that, some initiatives have been more successful than others, but, initiatives like Aadhaar, UPI, clearly, those are the rails that all of us are riding on today. If I just kind of in my head start to, calibrate some of what is being built now, clearly account aggregator, I think, is over the hump in the sense that there is critical mass there, right? Both providers and users will go exponentially. So in a 12-month horizon, I would place all the money I have, on just making that work. ONDC, I think it's a bold experiment. I don't think all of us, at least I, clearly understand what the boundaries of that are. It could pretty much be boundaryless, right? Because you're not just talking about product commerce here, right? Any kind of a commerce activity could sit on an ONDC kind of network. It is also that scope that makes it important to focus on a few things and get them done well. And then clearly, like every other trading transaction, financial services will have an opportunity to ride on top of that. OCEN, I think, just as I see it, it's beginning to need a little bit of rediscovery. And I say that because the fundamental, kind of architecture of financial services that OCEN relies on, which was the UK Sinha committee report and what LSPs meant then, is very different from what has now come out in digital lending guidelines and what LSPs mean now. Right? So the initial notion of LSPs was, agents of customer protecting customer interest and hence representing that side of the house. Whereas the current digital lending guidelines, make LSPs the agents of lenders, and then you are left asking the question, who's representing the borrower here? And while this is a, kind of the industry architecture that is being, promoted, there are technology implications to it. Right? What data should be visible to LSPs? What data should not be visible to LSPs? Right? Where does pricing happen? Where does fee reside? Right? So all of these arrangements have changed, over the last 6 months with the digital lending guidelines, and I think there is a bit of a architectural rethink required on what role will OCEN play and how.
Thanks, sir. So before Sonal picks up, so I'll come back to the question from the audience after that. Sonal, yeah.
I think I sort of completely concur with what Alok also said, right? I think public infrastructure has done really well. And I think we are at a space where there are some parts like ONDC. I think it is an amazing initiative, right? Even if you just look at it from the perspective of e-commerce opportunity, right? Bringing millions and millions of people online, both as customers and sellers. I mean, today we are like a 6% penetration in this country. So, just the organized retail is supposed to grow at like a 5% CAGR. Unorganized is growing, we don't even know how much. E-commerce has a massive opportunity, so ONDC can really revolutionize. And of course, as anything begins and the scope starts setting in, we will all figure in that journey, right? And I mean, I think it is also a great opportunity for e-commerce to get disrupted, honestly, right? So we've been doing e-commerce in a certain way over the last 15 years. It's been a great journey. There is, this new disruption wave that is coming into the country, and we would all be supportive of that, right? So I think the idea is how do you work together towards that? But I think what is also going to happen is that there's going to be a long learning curve, because even on ONDC, while of course we're talking about separate verticals, there's logistics, and then there is payments, and there are sellers, and there are customers. So many opportunities are going to get created, but how are they all going to tie from a consumer perspective? We still need to figure that out, honestly, right? But similarly, I think what is happening is that in the scheme of where the guidelines have been changing very rapidly, right, for good or for bad, it has put us in a space where we have all been continuously changing the way we've been operating, right? Whether it's the structures, how do you access data, consumer journeys. So there's so much back and forth that is happening that it does have an impact on a consumer at the end of the day, because the consumers are possibly saying, maybe let me take a pause, let them figure out what they all are doing and I'll come back. And that's actually happening, right? So, so I think maybe, you know, while we've been agile in creating some policies, but let us also be patient in sticking to those policies so that we can together work on, you know, just expanding the scope, and I think we'll be good.
Thank you. Any question from audience? Yeah. Anyone? Okay, so I'll continue. Yeah.
Hi, this question is for Hardika Shah. You spoke about the standardization of...
Ram, okay, first take your, I'll already take your name and also you can tell the company and then,
Sure, yeah. My name is Ram. I'm from a company called Hyperphase, which is into credit cards, backend systems, the stack and the engagement systems. My question is about the standardization of the data that we collect for MSME, right? MSME lending in particular is a lot about context, right? And where that particular business is at that point in time, right? And how much capital will they generate, right? So there's a lot of nuance. Unlike a consumer lending, which is pretty straightforward, right? You're a salaried person. There's a lot of predictability in how much you're going to earn, right? So what shape or what kind of a standardization can actually take place at all, right?
Hi, Ram. Thank you for your question. And you're right. MSME data is, you know, it's even today, MSMEs, we just heard, more unorganized, still fairly informal, still a lot of pen and paper, and to move them to digital, right? 10 years ago, we were all talking about, you know, new to credit, new to credit. Today, when we think of MSMEs, it's really they're new to digital, and that's the journey that we need to support them on without making it difficult. They're used to doing business a certain way, it works a certain way. How do you move them from pen and paper to something that works, that is not going to be onerous on them? But the point you're making is absolutely true. The MSME data is harder to aggregate. And for example, in our universe, we try to do as much of a first screen for what we can get from banking, and account aggregation will definitely help because now it'll become really verifiable banking data. GST helps, but not all MSMEs are under the GST banner. They don't need to be. And so GST data, even though they may have to provide some GST input credit to their buyer, they don't really file regularly. So even that is not completely verifiable. It is, you know, point and check. So the third bit is the only bit left, which is physical. You've got to go out and meet the customer and collect that information that is sitting in their universe and be able to digitize that. Hopefully, over time, they may see the value of that digitization and maybe move up that curve themselves, but perhaps a little helping hand along the way to get them there will help. But other than right now, some of these bigger initiatives around banking and GST, the rest of the data is still extremely unaggregated, which makes MSME lending not a straight line, which is probably why, you know, everyone struggles to do this last mile MSME lending, because it requires a little bit more design, thought, and recalibration. And embedded finance is also an area, if we can get to that invoice verification point, that could help, right? If they can get to digital invoices, maybe we move them one bar instead of their entire cash flow, and then that could help. So we've got to take mini steps. That's the only way out.
Thanks. Any other question? So, okay, so fine. She's giving an indication. So thanks. I think it was a pretty interesting discussion. I think from early days of embedded finance, where that have gone in the physical stage of the getting into electronic store, now to this stage of the digital, I think we have a bright future, and we hope every company become a finance company. So thank you everyone, and thanks panelists for having a insightful discussion.
Thank you so much to our wonderful jury for that impeccable and flawless panel. Thank you. We are truly humbled